Hey all, welcome to ShareTreck. This is Raj here, and today is the 29th of June 2022. Lots of important things happening today. Let's get started with our daily update. So first off, the US Fed does not have recession fears. That's what they said, and they have promised to continue rate hikes, and their main priority is to bring inflation under control. These are the two main messages that I would like to get across there. And therefore, I don't think there's going to be any bull market for at least today, in my opinion. But I was wrong yesterday. I thought yesterday we would have a little bit of a spike and then we will go down. But yesterday we had a direct down market. And today also futures are looking mixed. Some of the indices are bearish and some are bullish. So let's go ahead and take a much deeper look at all the news items that we have here and try to see if we can determine any potential trends in the horizon. Let's get off with the geopolitical news first. The news out here is Putin needs to be stopped in the battlefield, not with sanctions, says the ex-president of Lithuania. Of course, he's an ex-president. He can say those things. I don't think the current president is going to dare to make those kind of statements, because there's always a lot of responsibility on the leaders to make sure that they are balanced and fair. So these kind of statements won't come from the ruling party, I suppose. But anyway, the problem with the Kaliningrad, which I spoke about in one of my earlier videos, seems to be getting ripe. And there is going to be some kind of action out there to resolve the issues. I don't know how it's going to be resolved, because ECB sanctions require that Kaliningrad is separated from Russia when it comes to any kind of communication of or movement of goods and people, etc., etc. So that's still going on. So this is the first piece of news I have for you. This is definitely a bearish news for us. The second one is that Tesla is cutting about 200 autopilot jobs and closing office in San Mateo, California. This is like cherry on the top, because there are many other companies in the tech sector which have already announced job cuts. The way the greedy investor would look at it, I don't mean to say all of us are greedy. Of course, we are a little bit greedy. We want our dividends and we want profitability. But basically, whenever a company announces job cut, there is always a positive boost to the share price, because the expectation is that the saved cost is going to get into the margins. So the market being what it is right now, it's a bit risk off. So I don't think this is going to give an upward move for Tesla. And also elsewhere, I had seen a news article that said that Elon Musk is afraid that Tesla might go bankrupt. So those kind of statements are not very helpful in this kind of market. So I think that Tesla has got a lot of dedicated followers, both in investors as well as users who buy Tesla cars. It's a very good product overall. It's a pioneering product. And the company is great. So I don't think all these kind of instability from the CEO is going to make much of a difference. But in the long run, it will definitely take the shine off when viable alternatives like Mercedes and BMW get established in the EV field. So I think Tesla has got to get its public relations and communications act in place. And CEO has to behave more like a proper CEO and think before he talks, and not be on Twitter and social media like he is right now. That will enable the company to do way better and get more value for the shareholder. But that's my personal opinion. Please put in the comments what you think about this. Next, Fed's Mester backs 75 basis point hike in July if conditions continue to remain the same. That's a big if. I think the reduction in oil prices may definitely have an impact on the prices. And also, as I mentioned earlier, supply chain is easing a bit, and I have read news recently which indicate that freight costs are coming down. So those things are likely to show up in the CPI by pushing it down, and therefore maybe the 75 basis point hike may get diluted a bit, or maybe we just have one more 75 basis point hike and then we start slowing down on the hikes. I do not know how soon it's going to impact on the CPI, but there is definitely good movement in reduction of inflation, in my opinion. When it will turn up on the readings, I don't know. We'll have to wait and watch. But this clearly indicates that interest rates are going up, and with this kind of interest rate hike, I don't see markets going up in tandem. That's not likely to happen. So with that said, we have Bank of America's upgrading. Goldman Sachs says it will thrive in the coming economic storm. As I mentioned in my video yesterday, I'm looking more at REITs and banks to give a good return in case we are getting into a recessionary situation and that the times get tough. Maybe for the next 6 to 8 month period, I think banks and REITs are a good bet, in my opinion. There's another news I'm very happy about. That is that the title of this is "Why Big Tech is Pouring Money into Carbon Removal," especially with Germany going back into coal, Europe going back into coal in light of the sanctions that they have put on Russia, in light of the oil embargo that is supposed to click in completely by the end of this year. I think that's going to be more carbon getting into the atmosphere, and for us to adhere to the global targets of reducing greenhouse gases, we may have to do something about it. And I think that's where venture capitalists and others are seeing opportunity, and big tech is also seeing opportunity, and they are trying to do some kind of direct air capture of carbon and then locking it away somewhere. Maybe we'll ultimately end up in an industry where we are able to capture carbon, re-solidify it, and then use it again for energy. And that goes into some kind of a closed system loop. Don't know what's going to happen, but there are a few companies out there. Climeworks and Charm Industrial are a couple of companies named here. It's worthwhile looking into these, and I'll check out some of these and I'll get back to you and see if you guys are interested in following those companies. Another news talks about Bitcoin briefly dropping below 20,000 as pressures continue to mount on crypto market. I think Bitcoin is definitely going to go below 20,000. I had mentioned in one of my earlier videos, I think a couple of weeks ago, I was expecting 16,000 and then 12,000 because the tough times are going to last a little longer, and I don't know if Bitcoin has got the strength to hold on. We already had the Luna scandal, and we have had some exchanges having problems. So I think Bitcoin weakness is likely to persist for a little while longer. And the longer it persists, the chances of it hitting 16,000 or 12,000 becomes higher. That's my feeling. With that, let's go and have a look at Nasdaq and see what the indices are telling us today. Let's start off with the futures. The futures is looking bright. It's up 0.25%. That's a good thing. And we have been pushed down from this red line of resistance out here. And today we are forming a green doji candle before market open. This is around 8:22 a.m. Market is poised to get all the information that it's going to get from the ECB, which is going to happen around 1:45 p.m. our time. And also the 8:30 a.m. 8:30 a.m. GDP news. All those things are still expected at this point of time. And they will surely impact the market and move it potentially downwards, in my opinion. But you know, the market, when we think it's going to go left, it goes right. So let us look at what the indicators are saying and see if we have any further clues out there. Now, I'm looking at oil out here. We can see oil has already gone past all the exponential moving average, and the MACD is turning towards the signal line in a bullish manner, and momentum is also high. So against all the logic that I have had before, I am of the opinion that today oil is likely to go up further. There must be something that we are missing because with the demand destruction that is happening, we should have seen oil going down, but it's still continuing to go up. Now, this is negative for the market when oil goes up. It's not great for the stock market. So this is a bearish sign that we are having here. Next, let us go and have a look at the US dollar index. The US dollar index is inching up. And I think this is going to be a bit short-lived because, first of all, we have a resistance here at 12,956, which is likely to push us down. But at the same time, we have got the Bank of England, which is going to come up with its rate decision somewhere around 1:45 p.m. our time. and that is likely to move the markets a little bit. We may see a diversification of the funds flowing out of the US dollar and getting into the British pound, so that's likely to happen. Elsewhere, the Japanese central bank has said that they still find that inflation is not yet reached any target that they have, and the collective bargaining situation in Japan has kept wages low. They want to continue the easy monetary policy in order to enable growth in wages, and therefore they are not raising the interest rate at this point of time. So that keeps the liquidity in place in Japan. I don't know what they're going to do when the yen hits 140. Probably this news is going to push it towards 140. Let us have a look at where the Japanese yen is going. As you can see, it is steadily marching upwards. So sooner rather than later, the yen is going to touch 140. I can see a line of resistance out here, which I would put at this stage out here, and that's at 136.737. So hopefully it bounces back down, but then it has got immediate support out here, and this support continues to extend upwards. So I would assume that somewhere around 7th of July, we should be very close to having a 140 yen, and that's the time in which I think the Bank of Japan will have to do something to bring it down, or else their industry is going to have trouble exporting. Next, I would like to have a look at the put-call ratio. And as I mentioned yesterday, put-call ratio is somewhere in the neutral, but on the bearish side, 1.001. I thought it would be around 1.01 or 1.04 in that range, but it's come pretty close. So we are kind of getting a rhythm of the market in a way, but how we interpret that is a different thing. I hope my interpretation today is more on the mark. Now let's look at the VIX. The VIX is coming down, but it is still elevated above where it was yesterday. It has opened above yesterday's level. It's at 28.58. There are some schools of thought that VIX is going to come down and that it has met its peak resistance at 34.75. But I am of the opinion that we still have to see a whole lot of risks unwind. The risks are not yet over. There is a ray of hope that that might happen, that the risk will get unwinded. The Russia-Ukraine conflict might be done with, but we still have interest rate hikes coming up. Our supply chain is easing, but not fast enough. We need to see everything reflected in the consumer price index and see a downward movement, and I don't see that happening very quickly, and therefore I am still thinking that 40.03 is going to be the ultimate point that we need to touch before we start looking at any kind of recovery in the market, before we start looking at a turnaround that goes somewhere towards stability. And we are a long way from a stable market, which will be somewhere around the 20s on the VIX. It's a volatile market right now. Anything could happen. There are a lot of news events today, so be careful out there. Let us look at the QQQ and see what is happening with it. QQQ is showing a marginally positive pre-market open, and if we were to look at the chart out here, we can see that there is a lot of headwinds for QQQ, and this line of support which we had yesterday has now become a line of resistance, and we are way below that. We are right close to where we closed yesterday at 283.54. And the MACD, though bullish, is tending towards the signal line. We can see that from the lighter shade on the histogram, and the momentum is below average and pointed down. This is negative for the index, so I think it's going to go down. We can't totally rely on the pre-market action always. All logic dictates, all indicators dictate today that we are going to be bearish. Then we look at our S&P 500, and if you look at the S&P 500, again, we are bearish in S&P 500. Pre-market is showing positive, but momentum is below average and pointing down. I usually tend to believe more on the momentum because that indicates the strength of the market. I don't think the small bullishness that we are seeing has got enough strength in it. In any case, we have resistance at 389.67. And before that, we have to go through the 9-day and the 20-day exponential moving averages. So there is a lot of heavy headwinds out here. And if I was to go to look at the discretionary versus staples, that is XLY by XLP, it is showing a whole lot of risk-off market, like people want to get away from the risk, and that's not a good sign for Nasdaq or for genomic stocks. So with that said, let's go and have a look at crypto and gold and see what is happening out there. And when I look at Bitcoin, Bitcoin is showing a lot of weakness, and my line of support, which I had put there around 20,233, has been breached. So I'm going to mark this red, and it's going to be a resistance going forward. Our MACD is tending towards a signal line, and it's slightly bullish, but the momentum is beyond the 30% level, below the 30% level, which I call a civilization zone. So it's out in the wild. So it has to come back into the civilization zone to have any kind of impact. So I think that we are heading down with Bitcoin, and I'll show you my two supports that are there for me. One is at 16,527, another is at 12,981. So even if we go somewhere close to 16,000, I'm going to bite a little bit. I'm going to take a little bit of Bitcoin just to average out my dollar cost. And if I look at gold out here, gold is showing a bit of strength. It's gone positive today. It's up 0.46, but it has got strong headwinds. It has got a 9-day exponential moving average which is constraining it, followed by 20-day, and followed by the next resistance at 1841.26. MACD is bearish and momentum is still below average, so gold is also looking weak right now. And with that said, I would like to go and look at the genomics sector. So here we have the genomics sector. Everything is red in the genomics sector. I have got the biggest loser on the top, which was Invitae, followed by PACB. So I'm just going to have a quick look at the ranges that we had plotted within which they are consolidating, and to see if I can do any purchases today. So I would be keeping my eye out on Invitae, because it might come down today, and it could potentially come to a support of 2.15. It is right now at 2.62. We have got PACB, which is down minus 8.47%. It's coming very close to this line of resistance that we had plotted earlier for our narrow channel, but it's now a support for the new channel out here. So I would buy somewhere close to this level, which is around 4.52. That would be some of the things that I would think about. DNA is down minus 6.45%, and it's still way off from its base out here, which is at 2.12. So I'm not touching DNA right now. Teladoc is still managed to come back into our original range. I would like to see where it is going today. Pre-market, it is down minus 0.23%, and I'm thinking it's well coming into this range, but I'm not going to touch it because it's way away from the base that we have set up for it, which is around 27.51. Beam is down minus 6.20%, and it's testing this line of support out here. I should have kept it green. It's testing this line of support out here. It was the earlier resistance, but if it breaks down below this, then I would watch for it to go somewhere close to 29.44 before I do any dollar cost averaging. Bluebird is down minus 5.83%, and it's still coming down towards this line of support out here. Still ways to go. I would like to watch and see if it bounces off this line of support, because it has still not formed a new channel out there, in my opinion. We need to see another test at the upper limit and then coming down before we can say that we are consolidating in a new channel. This was our old channel in which we were consolidating between this green line and the green line above. It was bounded by 2.95 at the bottom and 3.73 at the top. And once we enter this channel, I would look for it to go and touch let us see where it is. This is at 2.95, and then I would bite on it. CRISPR Therapeutics is down 5.41%. It's still following this bull channel. It's still above it, and today's price action is going to see it's still having a little bit of room before it can touch this green line of diagonal green line of support. And we also have got the 50-day exponential moving average merging with this diagonal green line of support, and therefore I think there's a lot of support for CRISPR Therapeutics to hold it from falling below 61.97. We are at 63.23. Pre-market there, it's still flat with some trades in place. ARCG is down minus 5.02, but it's still not sufficiently down for me to buy it, because we had our line of support out here. I'm going to adjust this again. This is going to be our line of support at the bottom, which is at 29.47. So we are way off from there. We have got support from 9-day and the 20-day exponential moving average. We have to break down from all of that and touch this line before I can buy ARCG. Editas is down minus 4.52, still not enough for me to bite into it. This line of support has now become a line of resistance for us. Verve is down minus 4.22, but still it is negotiating this line of support, which was earlier line of resistance for the consolidation band below. So I'm going to mark that green, and if it comes down below this, it has got a support at 9-day exponential moving average and 20-day exponential moving average. I'm not thinking of touching Verve either. It's not in a state to buy, in my opinion. 276.17 is the current closing price for Vertex, and pre-market there are no trades. It is down 3.88 as of its previous market price. So it's down to 276.17, and it's supported by the 9-day exponential moving average. I don't see any reason to buy Vertex at this point of time out here. If we were to draw a trend line out here to show a bullish channel, I have got multiple lines of multiple touch points out here on this line, and this is where I think the support will be for the bounce back, and the earliest support is at 261.24 if it falls below all the 3 exponential moving average. So Vertex is still strong. If someone wanted to buy and they're willing to take the risk of the price falling down for 3 exponential moving average, it's likely to go up again, but that doesn't make any sense buying it right now. Wait for it to come down and then buy it. SQZ is down 3.56%, and if it falls down further, there is no no trade pre-market. If it falls down further and comes anywhere close to 3.02, which is this horizontal green line of support, I'm going to buy. So I'll be looking closely at SQZ today. And as you know, I just have around $2,000 US or $2,100 US in my US trading account. I have got more. I got around $31,000 in the US side waiting to be deployed. So I'm going to look at the shares which are cheaper, like somewhere around 2.62, somewhere around the $3.50 mark. So that's why I'm interested in SQZ. And Novartis was the least affected stock yesterday, even though it was down minus 1.30. Of course, they all have revenue streams. And if you look at the wider context, we have a big cone or a pennant in which the Novartis price action is taking place, and that pennant is coming on a rising trend, and therefore whenever Novartis breaks this trend, I am expecting it to go upwards, and there's still plenty of months. I mean, we are talking all the way up to somewhere in 2024, so there's plenty of time. This is a long-term chart. So having said that, I think overall today there could be a buying opportunity for swing trade or potentially for day trading towards the end of the day if we start seeing these prices fall further. And I'm going to be looking at the cheaper shares out here, which have got good amount of volatility. Of course, I like to caution everybody, these are all my personal opinion, not investment advice. Also remember, the VIX is above 20. Above 20 means it's conventional wisdom that you do not do any swing trading or day trading at that rate. But volatility is the friend of a trader, and I haven't made any money in a long time. I haven't done any trades in a long time. I'm itching to do some trades today. So after I close this video, I'm going to go back and start looking at the at my trading terminal. I'm going to log into my brokerage account and see if I can snag anything. I will potentially put a standing order to buy PACB somewhere at its bottom, which I think is going to be around 4.51. I'm going to potentially put a trading order for Invite to buy somewhere around 2.15, $2 to $4 range, which is SQZ Technologies. I would have a standing order in place for buying it at 3.02 or 3.07 range, or 3.10 for that matter, with the expectation that tomorrow it's going to turn up. And everywhere I want to be able to buy 1,000 shares so that I can also put calls when we come closer to the resistance at 4.01, or have the option to sell it when it is approaching 4.01. So that's my game plan for today. With that said, I think I would like to end this video. I hope you guys like this video. Be careful out there in your trades. These are all not financial advice, but just my personal opinion. I'm giving a insight into my mind, how I'm thinking. If you like this video, please press a like out there. It helps YouTube promote our channel, and we need to do that to grow our subscriber base. And if you have not yet subscribed, please subscribe and help us grow this channel. It's absolutely free, and I would look forward to you joining our community and help us grow this channel. Thanks, and have a great day. I'll catch you soon. Bye for now.